The following is a presentation of TFNN.
Welcome, folks. You got half of the Money Masters unless we do this thing simulcast from the Hard Asset Show up in New York. Tom is up there for one more day, so if you are in the area, please stop by and see him. Give him a big bear hug from me. Give a big bear hug from yourself. And, absolutely, I'm sure he's having a fabulous time up there. I understand that up at the Hard Asset Show that folks are buying gold at these prices. When I say buying gold at these prices, you got gold trading down $4 right now, out at $15.56, and $15.23 is at least on the horizon. That should be the next test out there. Our markets here, you got the Dow up 20 points, S&P's up 2, Composite up 10, small caps up a couple. You got the New York Stock Exchange down 3 points right now, NDX up 9. You've got the King Dollar up 31 ticks. Crude up. Crude is absolutely flat, up 14 cents, 12 cents right now. Around the world, let's start off around the world. What I've got up on my screen here is an ABC down of the Nikkei. And talking about ABC, folks, this coming Friday, I'm doing a full day around the world online webcast, teaching you how to buy and sell the D points. If you believe that these markets are a mystery, I will turn the mystery into mastery, and you'll create a masterpiece, folks. And that if you can't be there, it's still okay. You can still go to the homepage of TFNN, sign up. The workshop is going to be archived on your members page for 30 days, and it'll be an education that you really want to be able to have, in your toolbox, an arsenal of trading tools, simple trading tools. You just need to become an expert of that C to D move. Well, the first area here for the Nikkei was to get down to 88.35. What it actually did this morning, folks, got down to 88.38. You got to love that. That's when it had a starting point of 10,255. Well, that's not it for the Nikkei. The Nikkei is going to continue to move down at least into that 85.95 area. That's what I'm looking at. 85.95. It's going to go ahead and close a gap that's established out there. The Nikkei gapped up between January the 19th. Now there's a bunch of gaps out here, so I'm not so worried about I don't really take a look at the Nikkei from a gap standpoint, but it is going to close that gap. It is going to get down to the 0.786 area. It is right now below the 0.618 retracement, and the retracement that I'm looking at is going back from this island reversal candle, going back from November 25th in the Nikkei when it was at a low of 81.35. So it ran from 81.35 into the 10,250 area, and now all it's doing, it's backing off. If we go take a look at the yen, let's do that instead of taking a look at the Queen Euro. Let's go take a look at the yen, see what the yen is doing out there. The yen also making an A to B equals CD pattern, trading a little sideways right now, just building some cause, but the yen is on its way to 77, 80-ish. It's trading out right now at 80.04 to the U.S. dollar, but it also is making ABC down. In fact, if we go take a look at Sony, I haven't looked at Sony for a couple days. SNE is the ticker symbol there. Let's go ahead and look at Sony. That has got some more work to the downside, and I just want to take a look at this. Let me get rid of some of the stuff that's out here. And folks, you can always follow us on Tiger TV. If you are listening to us on the radio, we absolutely do appreciate that. This show here is archived on Channel 10, and or you can just simply go to the homepage of TFNN.com, click on Tiger TV. You can bookmark it on your device. Maybe it's an iPad, maybe it's a Google device, maybe it's Internet TV, and that way you can watch us on the big screen. Are we really possibly on the big screen? Oh, that'd be nice, baby. On the big screen. And so if we do take a look at Sony, got Sony trading out right now at 14.06. We may be able to pick Sony up in the $7 to $8 range. But how we're going to be playing Sony, how I'm going to be playing Sony is when I see the Nikkei make its full A to B equals CD down, as well as the yen. And that's how I'll be taking a look at it. Again, trading out at 14 bucks and a little bit of change, and it has lower price that it is seeking out there. 877-927-6648. If we go back around the world, let's go over and take a look at what's going on in Germany over in the DAX yesterday. You did have the DAX reject its October 28th swing point. That October 28th swing point has a high of 64.30.60. Yes, you're closing. You're trading inside that range right now. Maybe during Kate Stalter's show, you'll want to pay attention to 11:30, see where the DAX closed. Now, yesterday, the DAX rejected that area, and you would have thought that we would have maybe closed more towards the midpoint of our trading session here in the U.S. That's not what happened. We traded lower. That was all about King Dollar, Go Long America. Wearing my Go Long America shirt today, and watch the DAX. I believe the DAX is, well, first, what I know is this. The DAX is making an ABC down, and the DAX wants to trade down to its gap area. It wants to at least try to get into the 59.87. I think more likely what it wants to get down to is 58.98 area. You're trading out at 64.21. So the DAX has got some work to go. This is not a index that I would certainly want to be long on, and neither should you, folks. So that's on the DAX. If we go take a look at the FTSE, see what's going on inside London here. Do I have the FTSE up? There we go. Got the FTSE trading out at 54.43 as we speak. Let's go take a look at the patterns out there inside the FTSE. The FTSE making an ABC down. Let's take a look at that pattern here. We're going to start with our swing point on March the 14th when it was trading out at 59.89. Whoops, didn't mean to move the entire chart. Let me try that again. FTSE, there's our swing point, March the 14th. That's the swing point high. The B point, April 11th, the low down there at 55.76. Our C point, it makes a retracement. It looks like a relatively shallow retracement into May 2nd. May 2nd high is 58.19 even. 58.1993 on May 2nd itself. That is your B point. It has made a one-to-one A to B equals CD down. That price projection looks like about 54.07. That actually got down to 54.11 this morning. But the work on the FTSE is not done. The FTSE wants to trade down to the 52 and change area. And we take a look at 52 and change. That's likely going to be a retracement area coming off of the November 25th low. And sure enough, it is. That's the 0.786 area on the FTSE. All of these markets are in harmony here, folks. They're all making A, B, C, D downs, and they're all headed towards November 25th in unison. If we go take a look at the rest of Asia, haven't done this, let's go take a look at the Hang Seng out there. Hang Seng closing out at 19,000. Let me make it easier for me to read here. 19,894 last night. Now, this is kind of interesting. Let's see. What is the retracement? 0.382. So the Hang Seng making a 3 drive to a bottom pattern. Let's see just simply how symmetrical this is. I don't know if this tool is working on this system. Let me try it here. So I'm going to go from the swing point low on March the 7th all the way to the swing point low that came in on April the 11th. Oh, man, is this a 3 drive to a bottom pattern or what? Holy cow. Okay, so let's go take a look at the Hang Seng. Let's get rid of everything that's out there. Now, a 3 drive to a bottom pattern. The first drive, folks, is off of the highs that came in on February 29th all the way down to the low on what date? Well, you'd say March 6th in the U.S., but it was March 7th in the over in Asia. So that was your first drive. Your second drive came in on April 11th. That set up the time period. And then you have your third drive, which was this morning, when it got down to a low of 19,639. And what I did there, folks, is the first tool that I put up there was just take 3 drive to a pattern. What you really are looking for, you don't want to force anything. And what you are trying to do is you're just trying to look for a symmetrical pattern. And the symmetrical pattern, when you take a look at it from a time frame, it doesn't get much more beautiful than this. And this is going to be real important because you learn more from failure than you do from success in life. We're going to learn and understand exactly what the Hang Seng does this evening, but it's setting up and it's saying that it wants to bounce. Why do I say that? Because that's typically what a 3 drive to a bottom pattern will do. Take a look at the time frame. You know, Basil says left side, right side, time price match. Well, you got the left side, right side time match, absolutely, on the Hang Seng here. When you take a look at the trading sessions, I mean, man, oh man, how good is that? So if we draw that pattern, let's just go see what that actually looks like in living color. And so we're going to go from the low there of March the 7th up to the high of March the 14th. I'm just simply going to use this tool here, draw all the way down there. And you can see you got really nice. You got a 1.272 expansion off of this last swing point. Look at how symmetrical, how beautiful that looks. Actually, from the March 7th swing point down to the low this morning, very close to a 1.618. Looks like it was 1.79, but we're going to go ahead and cut it some slack. Now, we're going to take a look at the low out from November 25th. One world market out here, folks. So we take a look at the low of November 25th. That's our major intersection, our major swing point out there. We go from that low all the way up to the high that was put in. Now, the high was actually put in here on February 29th, David White's birthday. So it's below the 0.382. That's too bad. Let's go take a look at some other swing points that are out here. I was thinking that it was at the 0.382 area. Let's go see where it's at the 0.382 area of. Is it December 19th? Is that where it's at? It is not. Strike two. That, folks, that leaves me with one more pitch to hit it out of the park. And so we're going to go to the swing point here of January 9th, the low out there of what 18,302 up to that swing point high. Is that the 0.382? I got so much junk up here. Got to get rid of that. So let's try that again. We're going to see if we have a 0.382 retracement, because what you really want to do is you want to see these. Now, you got a 0.618. Bingo! How about that, folks? You can put up my bingo card here. Now, it's not coming off of the most major swing point out there, but it certainly is coming from the next swing point on the way down, which is January 9th. The reason why I was searching, folks, is because you want to see a 3 drive to a bottom, a 3 drive to a top pattern, align itself with a Fibonacci number, just simply for whatever reason. I don't know the reason why. I just know that it works, just like I know electricity works, or I hope that electricity works, but I don't know how it works. In this case here, you had a 0.618 retracement, and you can see that it's completed really right at about the same area. Real important to be able to watch the Hang Seng tonight, probably more so than anything else, because it could be Asia that goes ahead and kicks off a bounce in the marketplace. If not, it'll be a major failure, because you don't see patterns like this set up all the time. 877-927-6648. We'll be right back.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers, where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume and the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
It's that time of year again, and the Great Panther Silver Summer Silver Giveaway is back. Every day in June, Monday through Friday, we'll be giving away a Great Panther Silver 1-ounce silver bar, and all you have to do to enter is visit the front page of TFNN.com and fill out your entry. Great Panther Silver and TFNN wishing you a great start to the summer. Sign up today to have a chance to win a 1-ounce silver bar during the Great Panther Silver Summer Silver Giveaway the whole month of June at TFNN.com.
What you think about, you bring about. What you focus on grows. If you're committed to becoming an extraordinary trader and investor, then make mastery your outcome. Yes, my best student, Steve Rhodes, became my best teacher. But even more important is what he's taught me, and the time is now for you to take advantage of his knowledge.
Thanks, Tom. I've learned that it's not what we do once in a while that shapes our lives, but what we do consistently. I want to teach you the consistency that exists in the stock, futures, forex, and commodity markets day in, day out. For one solid day, Friday, May 18th, I'm going to conduct an online master trader course that'll teach you how to buy and sell the D point. This one pattern alone, with the single best entry and exit techniques, when combined with my money management strategies, will create extraordinary rewards for you and your family. The course will be archived so you can review it as many times as you'd like, and it'll teach you to become a master. All the details are on the homepage at TFNN.com. Sign up today because mastery is one click away. It's your decisions, not your conditions, that determine your destiny.
Wow! Go get him, folks.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks. Let's see here. You got the Dow up 40 points. S&P's up 430. Yeah. You've got the composite up 14. Small caps now out of the gate up 0.4%, up 3 points. Let's go to Eric in Tennessee. Eric, thanks for calling. Thanks for holding.
Hey, I appreciate you taking my call. Thank you.
My pleasure. How are you today?
Yeah, doing great.
Good.
How are you?
Good. What part of Tennessee are you from?
I'm in the east part, Knoxville.
Okay.
Yeah.
That's right at the foothills of the Smoky Mountains, or do you have a ways to go before you get to this?
Yeah, half hour.
Half hour.
Like that, 40 minutes. So, yeah, we can see them on a clear day, and we go up there quite a bit. So it's great.
Oh, it is absolutely great. As a kid, I was a Gatlinburger. Used to go to Gatlinburg.
Oh, yeah.
Used to go to Gatlinburg all the time.
Yeah, they've kind of turned the area into a little bit of a, those Ripley's, believe it or not, kind of crummy areas. But if you can get through some of the, cheesy tourist stuff, Gatlinburg and those mountains are fantastic.
They are. Now, hold on a minute here. I used to operate little retail concessions inside the Ripley's, believe it or not.
All right. I got myself in trouble. I'll have to take it back.
No. It was a great product. It was where I put your face on somebody else's body and turned those into magazine covers and movie posters. So Ripley's, believe it or not, absolutely. And they're headquartered in Canada. A really great group of folks to have worked with. But I know what you're saying, though.
But, I don't have kids and stuff. So, I have probably a little different approach to that. I just kind of want to get out and kayak and fish and that kind of stuff.
Absolutely. My first encounter with a bear, of course, speaking of bear markets that we're in, was actually up in the Smokies. There's some big bears up there.
Yeah. Got to watch what you do, for sure. So, especially if you take Mama off. You don't want to get Mama mad at you,
yeah. Myself and a bunch of good friends of mine, we were there. It was, it rains fairly often, unfortunately. We didn't realize that. So it was on one of the years, it was kind of a weird kind of a trip. And we were just walking the trails, just in a pair of shorts, no nothing, and ran across a fairly good-sized bear looking at us. And we were like, I hope he's not or she's not hungry.
Yeah, exactly.
I said, let's just keep walking. Let's not run. Let's not look like we're scared or anything like that. But
I guess that is a if you don't panic, you're good. So anyway.
And I would take that line that you just said, and if you just don't panic in life, you're good. Let that fear just come in, get out, and make decisions from an area of strength. And I'm assuming that that's what you want to do when you take a look at Gold Corp. Which is what you called about. Yeah. So tell me what you're doing, what you're looking at, and how I can help you.
Well, I actually nibbled a little bit.
Okay.
So I took a little position here.
Yes.
Using my power of one calculations and all.
Okay, I love it.
I got my stop in place.
Okay.
And just, wonder what you thought of it. I have a stop. It's actually $2 lower than where we're at.
Okay.
Which is a little larger stop than I would normally take.
Okay.
I'm a little quicker trader and, tighter stops, but, looking at Gold Corp, I might take a little longer term position in this, so I could take a couple bucks down to like $31.50. But I just wondered what you thought of that.
So if we take a look at it from a longer-term standpoint, what I would do is if you have some charting software that you use, I would take Gold Corp and I would take a look at the longer-term chart, and I would go back and first start off with a weekly chart. And when we take a look at the weekly chart, the area where you may have some support if it continues to move downward, and you're even thinking that's a possibility. 3102 is the top of the swing point from October 10th, 2008. And that's the last swing point that has some real volume out there. I'm going to go ahead and put this on a monthly here. Now, on the weekly, before I do that, there is an A, B, C, D down pattern, the most recent one, and it's the smaller one, which would start from the week of December 12th, 2011. So the high there, 54.14, that's your A point, and it moved all the way down into the December 30th time frame when it made a low of 42.05. It does a retracement. Looks like it's probably somewhere around a 0.618 retracement, 0.786. So right in between 0.786, 0.618, and starts making that C to D leg. And right now it's past the 1 to 1.272 and hasn't had a bullish candle yet. And that says that it should probably do the 1 to 1.618, which would be right down. The 1 to 1.618 brings you right down to that area, the 3102 area, and a little bit of change. But, Eric, are you good to just hold through this next commercial? We'll go ahead and take a look at it further.
Yeah, I'd love to. Thank you.
Oh, perfect. Okay. So stay tuned. We'll be back with Eric. We're taking a look at Gold Corp out there, folks. Right now in the markets, you got the Dow up 37 points. S&P's up 5. Actually, Dow up 44 points. And we'll be right back.
You've heard Tom O'Brien on the air, and you've always thought about trying out his newsletter, Market Insights. Well, now is the perfect time. For a limited time only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. If you decide to cancel within the 2-week trial period, pay absolutely nothing, and keep Tom's book as a free gift from us. Tom sends out his daily newsletter each morning by 9:30 a.m. with trade recommendations, including price targets and price stops. As recently as March 21st, Market Insights subscribers closed out a position for more than a 25% profit in just over 2 weeks. To get your 2-week free trial to Market Insights, along with your free copy of The Art of Timing the Trade, Your Ultimate Trading Mastery System, visit the front page of TFNN.com. Supplies are limited for this one-of-a-kind special, so act today and don't let this opportunity pass you by. Offer only valid for new subscribers. In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and the Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks. You got the Dow up 26, S&P's up 3, New York Stock Exchange down 3 as well. We are on the line with Eric in the Knoxville, Tennessee area. We are taking a look at Gold Corp. Ticker symbol there is GG, trading out at 33.38 as we speak. So we're going to take a look at the daily chart, and I think I see maybe one of the things that you were taking a look at, or could have been taking a look at, which was the bullish engulfing candle that took place on May the 9th. Now, while this has been, moving down into these areas, you had a bullish engulfing candle. That's where, are you watching this on Tiger TV? Eric?
Yes, I am.
Oh, perfect. Okay. So you got this May 9th candle. It's the very first real bullish candle that you had in quite some time on the ride down here, and he had this bullish engulfing candle. That's where the entire body here engulfs the at least the prior session. It did that on May the 9th. The problem with that candle, and you were also trading inside the swing point that goes all the way back to February 5th of 2010. So from a charting standpoint, if you were going to mark anything, I would be marking the February 5th swing point. The high there is 35.58. It's a fairly large swing point, 35.58. The low is 32.84. Those are the two red lines that are going across the bottom of my screen. Now, when you had that bullish engulfing candle, the following session, you had a failure. Failure, what I mean is you had a close below that bullish engulfing candle, not at the bottom of it, but inside. You didn't get higher price on the next day. And that was telling me at least, that the market wasn't ready for higher price just yet. And since you were inside that swing point on the daily chart, now the daily chart also has volume of 18 million shares. You had a little scary event. You had 18 million shares on April the 26th, but that's okay. You had volume come out before you got into that swing point. And when you got into it, you did with 8.9 million, 8.7 million, 5 million. Yesterday you did 5 million, 6 million. So it doesn't have necessarily the juice. You do want it to at least test the bottom, which would be the 3284 area, and it is not down there yet. So the first thing I would be looking for is a test of 3284, meaning you'd like to see it get to at least 3283 or lower, and then close back up above 32.84 on something less than 18 million shares. Yesterday, if it would have done that, would have been a nice setup because it only did 6 million shares. If you get a close below it on the daily chart, and when I say it, 3284, that tells you that you have lower price. Now, even because you test it with the way that this thing has dropped, even if you test it and close back above it, back above that low of 3284, you still want to see some type of bullish candle pattern. You want to see something that's green. In the greener, the meaner, the better, the bigger, with some type of conviction. And you want to see, preferably a hammer candle or a bullish engulfing, which are the two best single candles to take a look at. If you don't get that, then the market is telling you that the move may not be over. And that's where I'd switch over to the cautionary sign, which is now going to the monthly chart. And when we take a look at the monthly chart, the monthly volume that sticks out is at October 2008. Remember on the weekly, I pointed out, I think it was October 8th, 2008, as an area where it would go to. Well, when you go to the monthly chart, the entire month of October happens to be your volume area, 421 million. Now, the beauty is you're coming into this area with much lighter volume. So you're in the right stock, in my opinion. The problem is that you're now inside that swing point. So you want to see it post-haste. I mean, post-haste. You want to see it get out of 33.85, north of 33.85 real quick, because you're at 33.47. As long as you stay inside there, that the first set of numbers I gave you on the weekly chart is where it is likely headed to, which is $31. So because you're taking a look at this as a longer-term trade, because you have a wide stop, you may need to expand that stop a little bit more, or if you get the failure on the daily chart, take a small loss and just wait to take a position when it tests that lower $31 area.
I think I'm going to be, that's excellent direction. I think I would take my quicker daily loss and let it prove itself from there. So
yeah, and that's really the market, it's a nice setup, really, with the exception of the fact that it's going with the direction of the market. The gold market with the regular market itself, and we know that gold stocks have taken a beating, and, the stock would be just fine for it to get down to, $30 and a little change. Nothing wrong with it. It'd be setting up a nice AB equals CD pattern, and you got light volume to the downside. So you're in the right stock. It's just you're not maybe necessarily in the right market just yet.
Gotcha. And, I was looking at when you were diagramming that, you're taking those levels, like on the monthly and the weekly, you're taking them from the tops of those candles. Is that?
For right now, because that's where we're inside of. You absolutely, when you're inside a swing point, you can go to the bottom of it. Now, when I take a look at the volume behavior here, let me just refresh and make sure I've got the right volumes here. From the volume behavior, this is not signaling to me that it wants to go test the bottom. If you were starting to come down into this thing with accelerated volume, then I would have pointed you towards, hey, this would be a great buy at 1384.
Yeah.
But I don't, it's not that it can't get down there right now. That's not what it's that's really not what it's saying.
No, you've given me a good plan. I really appreciate it.
Hey, my pleasure, and thanks so much for calling.
You're welcome.
Okay, have a great day. Let's go. We did have a request to go take a look at the DIG, which is the energy sector of the S&P. That request came from none other than our Tiger's Den folks. And, if you're trying to take your trading to a new level, TFNN, I think we do offer it all. And one of those areas is that Tiger's Den. That is a group of traders. There's usually at least 100 folks in there that are willing to help you. They post charts. They can help to answer questions. It is just simply a great resource out there, a great trading resource. You can always try that for 30 days. No obligation. Go to the homepage of tfnn.com. You can do that if you're looking for more education. Because to me, the real power of what it is that I'm going to be doing this coming Friday in the Master Trader course is taking the mystery. It's taking one letter and converting mystery to mastery. All you have to do is replace the Y with the A, and that's part of the AB equals CD. But it's really to really be able to empower folks like Eric, like yourself, so that you can go out there, you can identify your own trades. And to me, that's where the real power is in what jazzes me up in what I'm doing. It's about being able to certainly help others. The two areas that I like to dedicate my life towards is contribution and growth. I love helping you grow. The way that I help you grow is by growing myself. If you didn't catch the first segment today of the Trader's Ed Show, go listen to the archive of that. I'm sure that Al here will get that up sometime early. And I just simply talked about, because I get the question often is, how can I help my kids? How can I help somebody else in my life? And the best way to do that, folks, is to absolutely help yourself. And the easiest way to help yourself is to work on the self-development. In this game here, the game of life and the game of the markets, you want to certainly be able to work on the game, the mental side, because trading is 80% mental. You got to have that patience. You got to have a plan. You want to make sure that you just simply wait for the market to tell you what it's going to do. You can truly sit back and wait and tell you what the market is going to do by understanding the patterns that are out there, by taking a look at some candle signals. It really is not as complicated as you might think that it is. What gets complicated is when we let our emotion get in the way and we don't do what it is that we know that we should do, because you know what to do. You absolutely know what to do. You just don't always, we don't know. I say you, I'm not really speaking about you specifically, but I'm talking about in general, right? We know what to do. So I'll change it to, we know what to do. Just sometimes, many times, we don't do what we know. And so if you just step back, you just always take a look at a chart from a new perspective, then that will help you. So maybe when we go take a look at the XLE, that's the energy sector. That's where I would start inside the taking a look at the DIG. But since I moved over to this page here and XOM pops up, it's really about XOM. You talk about the NDX 100 being about Apple. Well, the DIG trade or the DUG trade or the XLE trade is really all about ExxonMobil. I believe it's still about 30-some-odd%. If you go over to the Spiders homepage, you'll be able to pop in there. You'll be able to see exactly what the weighting is inside that structure right now, but it's up in the high 30%. I believe you got Chevron as number 2 and Schlumberger number 3 or number 4 right around there. I think those three stocks account for nearly 50% of the XLE. And so we're taking a look at the XLE right now. What it is doing, it's coming against what? October 27th. Just like we said, hey, you're going to want to take a look at the DAX, see where the DAX closes during Kate Stalter's show. She's coming up next, and because you're going to have the DAX close out at 11:30. Well, right now, today, what ExxonMobil is doing, it's testing October 27th. October 27th has 35 million shares. When you first came down and tested it, you tested it with 19 million shares on April the 10th. Not enough volume to do the kibosh, to bang it down. What's it do? Can't bust it down. Tries to go topside, moves up into the May 1st time frame, 13 million shares, coming into a swing point that had 15 million shares. Not enough energy to bust it to the upside. So what's it do next? Tries to bust it to the downside. Well, you did gap down yesterday, but you did it with 12 million shares. Not enough energy to the downside. You've been trading here for an hour and 14 minutes, 3.2 million shares. So today you're going to have energy somewhere in the 18-ish million range. Again, 18 million going into 35. Not enough energy on the way down. Now, the energy sector, which has absolutely been crushed, we're going to go pull up the energy sector here in a minute. Now, that's ExxonMobil. So let's go take a look. And, ExxonMobil is important to take a look at both from the Dow standpoint or from the S&P standpoint as well because of the weighting inside that structure. Now, the XLE used to be the second weighted index inside the S&P 500. It has been hammered so badly, it has fallen to number 5 shocked the heck out of me last night, actually, because I don't every day. I don't go take a look at what the new structure, weighting structure is inside the S&P. But I did not expect to see it drop to the number 5 position. It used to be number 2, then dropped to number 3. And on the Dick Clark's hit list, it now is number 5. And why is it number 5, folks? Well, it's number 5 because it has been falling like a rock. So when you take a look at the DIG or the DUG, what you will see, though, is look at how this has been crushed when you come to October 27th. October 27th had a high of 73.19. You're trading out at 66 and change, and it busted through that area back in March of 2012, March 12 to be specific. Now, the volume that you've got out there, let me just draw that line across the bottom. You know, you've come through that area, and the area again being October 27th, and you haven't done it with any volume. Just like to the upside, as it came through that area, it did not do it with any volume. And that's what's making some of this market a little bit more difficult to navigate, because the volume is not necessarily giving us great direction as it hits swing points. What it is doing, and where I believe the XLE has got its next area of support, just simply if you take a look at the daily chart, is this high volume downdraft bar from going all the way back to August 5th, 2011. The high there, 70.16, the low of 64.47. You're trading in between that area right now. A 1-to-1 A to B equals CD takes you to 64.07. The low of this bar is 64.47. Sounds to me that is really the next area of support inside the energy sector. Now, when the XLE on its latest ABCD down, the B point on this was April the 23rd, had 17 million shares. As you were coming down into this thing, folks, you were coming down with volume. 22 million on May the 4th. You had 15 million on the next session. You had 25 million on the session after that. You bust through it with 21 million. Again, that was going against 17. So now you have got a confirmed A to B equals CD on the XLE, a confirmed AB equals CD down. If the $64 area doesn't hold, and it's got some volume there, it's got some juice, it's got some volume, and I suspect, based on the way that this is trading, the way this has come off the C point, you're really looking more like 61.72. It's just as your pilot, when it gets that $64 area, I'd be putting on the turbulence sign. Right now, it's just kind of gliding along, trading out, and just continuing to make its A to B equals CD down. That is on the XLE. If you're trading the DIG and you're in it, you're going to feel some more pain. And if you are in the DUG, I would stay in it until you get into that $64 area and wait to see what type of volume you've got there. So hopefully that helps to, and I forgot who requested that inside the den, but even if it's not the den, hopefully that helped you out there if you are listening. Let's see, what haven't I done? Well, we haven't looked at gold itself. Let's go take a look at the gold contract, trading down $5 right now, out at 15.56. Let's go take a look at the daily chart out there. The daily chart, you don't see anything bullish candle-wise out here in the gold contract, and for good reason. The good reason is it's headed all the way down to the lows. It's headed down to the 15.35 area. That's really the next stop. Now you have some good volume there. The actual swing point, where there's not a lot of volume from a contract standpoint, is 15.23. And not having a lot of support down there at 15.23, that's from December 30th, folks. We'll see if gold is able to hold 15.23. Longer term, gold's pulling back to $1,100, and then we'll be all over it. We'll be right back, folks. 877-927-6648.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
Catch Kate Stalter on the Small Cap Roundup, Tuesdays and Thursdays, 11 a.m. Eastern. Up next on TFNN.
Welcome back, folks. Let's see, you got the Dow up 15 points right now. S&P's up 2, and leading the charge on the way down, you've got American Science, ASEI, is the ticker symbol. They're trading off about 17% right now, American Science and Engineering. Let's go take a look at that stock, see what we can find out there. And, folks, it is all going to be about the Hang Seng. The Hang Seng, while we were just simply going through charts and taking a look at patterns out there, the Hang Seng is going to give you the clue as to whether or not this market is going to bounce. Now, the Hang Seng could take its cue from the U.S. market, but with King Dollar moving up the way that it is, I don't think it's going to get that cue today, but it could. Let's assume that let's take a look at one scenario, and the scenario is that the U.S. market trades down or flat or just up slightly, so you're not going to get a big cue there. You're going to want to tune in tonight. Tonight while you're up, you can take a look at the Hang Seng. I would take a look, sometime around 9:30, 10:30 at night, and see how that has either popped or dropped. It has made a 3 drive to a bottom, and I mean, it's textbook, folks. It's so textbook. I'm going to make sure that I've got that as one of the charts inside my workshop this coming Friday, and in any other one that I use, because it is a beauty. Just like this one right here, American Science Engineering. It's a beauty, but it's a beauty to the downside. This thing gapped down this morning. So far, you've been open for an hour and a half, just short of an hour and a half. This has done 136,000 shares. Pretty illiquid company. I would not be trading this thing at all. just simply not enough volume, doing 22,000 shares. So, that's not something that I would like to trade. Coming all the way back to this high volume gap down area and this swing point, and that is what it's testing, and it's in here, with more volume. The actual swing point, if you're going to go and be right to the T, you'd be looking at August the 10th, only had 69,000 shares, and so far today, you've done 137,000 shares. So this thing wants to get all the way to the bottom of that range, the bottom there being 54.67. And if we just simply take a look at an ABCD pattern, looks to me like it has further to go in the game. You've got a small one that's out there, but it's really the larger one that you'd want to be paying attention to. The larger one, let's just draw that one, because that's the ABC that says, ouch, this might need a Band-Aid, and the kind that when you pull off, it doesn't pull off all your hair. And if we take a look at this one, right now, this is the one that does pull off all your hair, and you're looking at getting down into the 52.80 range. So that is on American Science Engineering. Let's see, what else do we have? Let's see, what do we got popping? Well, you got Priceline. We haven't looked at Priceline for a while, so PCLN. That broke a swing point with volume. And let's go take a look at Priceline. It's still trading below that swing point. Priceline making an ABCD down pattern if you get a little bit of a retracement here. Now, the swing point that I'm talking about, it broke it on a weekly basis, and I believe it also broke it on the daily. We'd be looking at April 24th, where it did just over 1 million shares. As you came through it, you came through with 1.6 million shares on May the 11th. The low of that April 24th area being 678.04. So let's say that you happen to be one of the fortunate ones that rode Priceline all the way up. Maybe you got into it December the 16th when it was trading down at the $448 area. Folks, you broke a swing point. It hasn't broke a swing point on the way down in Lord knows how long, certainly not since November 25th. And if you haven't taken some profits, if you haven't tightened up your stop, attend my workshop, because you absolutely ought to. Don't take any pain. This is headed towards at least the gap area down at the $627 mark. It's at $675. No reason to take that kind of heat, or get a stop in place somewhere so that so that you just don't continue to take heat. You just don't need to. If we go quickly over to the ETF indexes on the daily chart, see what we have going here volume-wise. In the Qs so far, 23 million shares. Yesterday you did 46 million. You got some volume inside of the Qs today. If we take a look at the SPYs, yesterday you did 163 million. Today, 57. There's some volume in the marketplace. How about that, folks? Because you're only an hour and a half into the trading session. 19 million on these small caps. Yesterday, you did 51. Thanks so much for joining me. Stay tuned for an absolutely fabulous show as we go out to Santa Fe to our gal Kate Stalter, then up to Victor Jones in Chicago, out to Ken Shreve at 3 to 4, and I'll be with you today from 4 to 6, folks. Have a great morning, a great afternoon. Look forward to seeing you at 4. Take care.